In this video, I'd like to talk about a few different methods that I use to try and gauge market activity, the movement within certain time frames. So if I'm going to day trade, for example, let's say off the 30-minute, I use reversal patterns. The 1 hour chart, I also use reversal patterns, the Tech One trade. These are techniques that I developed. And then the continuation breakout trade, I also use that on the 1 hour chart. So the reason that I'm making this video is to help you try and determine if you find a trade setup. Let's go to the dollar yen. If you find a trade setup, how likely is it to move to your expected take profit level? You hear me talk about this quite a bit, and I refer to it as the other side of the trade. When I came up with that term, what I was talking about was, for example, I'm going to open up the charts and I'm going to go to a certain candle here. Let's just say this one right here. This bullish candle. Sorry about that. This bullish candle right here. This bullish engulfing candle. When I first started trading back in 2001, I bought every book that I could find at the bookstore, and then I rented them at the library, and it was all on the subject of candle patterns, candlestick patterns. Steve Nissen, all of them. And then I bought some online courses, and basically what I was doing was trying to trade every candle pattern that I learned about in these books. Bearish engulfing, bullish engulfing, things like that. And I really wasn't too familiar with a lot of the indicators because a lot of the books that I was reading, each one of those authors would use or had their own preference on some of these indicators. So I also had to learn what indicators would help me identify divergences and confirmation. So it was a specific strategy. Was I trading inside of consolidation, or was I trading a breakout? But regardless, what I want to help you do is when you find a candle pattern like this one here, let's say this bullish candle, and we're thinking, well, here's the start of the week, and it bounced off that low, and it started to move up and pulled back, and then here it's forming a new bullish engulfing candle. And back in 2001, my first thought would have been, this is it. It's likely to take off. I got to get in right here. Here's a bullish engulfing candle. You can see this little uptrend here holding. That low didn't take out that low. That low didn't take out that previous low. You get the point. It's sort of trending. And you would think this is a good trade. I got to get into it. The first thing, obviously, that we all think about is where's the stop and where's the take profit level. And you want to make sure that the reward is worth the risk, first of all. And that's up to you. All of us are going to use different stop loss, different take profit levels. But what I mean by the other side of the trade is that if I get into this bullish candle thinking that price is going to go higher, what if it doesn't? Like, what will happen if it's a slow day? Or what will happen if it's a busy day? Or what will happen if there's some economic data? And when I first started trading, I wouldn't think beyond just getting into the trade and identifying the candle pattern. That was like, you have to build up that ability. So these tasks and these skills that we learn, you're not going to learn them all from watching one video and then applying it once. There's going to be multiple skill sets that you're going to have to practice at or be aware of, or you become more aware of it as time goes on. Of course, unless somebody with a lot of experience was just going to point them out to you at different times, and then you can get like you get to cut to the front of the line kind of thing. But you get the point. If you're doing this on your own, which what I was doing back in 2001, I wasn't thinking about what was going to happen after I got into this trade. I would just get in and I would hope for the best. And then something like this would happen afterwards. It would just start going sideways. And these are 30-minute candles. So about 2-3 hours, I'm sitting here and I'm thinking, this isn't going to work. And the mindset at that point, because I had unrealistic expectations anyway about where my take profit level was going to be. Usually it was really aggressive and I was hoping for the best. But I wasn't taking into consideration the market activity, how much participation, how much movement is there today. Is today likely to be one of those slow, sideways moving days with a lot of chop, low volume, not much movement, price isn't going to cover much of a distance here. Unless, of course, you're scalping on a really small time frame. We're looking at a 30-minute chart. I'm comfortable with a 30-minute chart. So one exercise that I started to implement right away was, and I know that this might seem like an extra step for a lot of you. Many of you don't need to do this. It depends on how you look at this information and how much effort you're willing to put out. Really, I mean, that's what it comes down to. The more effort you put out in this business, the more successful you're going to be at it. I mean, you listen to the top traders, the top hedge fund managers, Ray Dalio. I mean, I said this a while ago. He compared trading and being at being at a top level as far as a trader, being successful. He compared it to the Olympics. You know, he said that winning the Olympics and having a skill that you practice at over and over again, hire a coach, it's easier than trading. And I know a lot of people don't think that, because in certain environments, it's easy to make some money for a while, and then all of a sudden everything changes, and it'll test your ability, and it'll test your skill level or your experience. Now all of a sudden you've got to learn and gain more experience with information that's new to you. So be careful there. But one of the things that I did when I started to expand my understanding of how to read the markets, I started measuring the highs and the lows of the candles relative to the time frames that I was trading. And I would put that on a spreadsheet. And what I would do is I would measure the high and the low and then calculate the total pip from the high to the low. What's the distance? And I would do this ongoing from the time that I start trading. Let's say here's the London Open. Here's right around the New York Open. So I would continue to do this. And on certain days, it would look something like this. So here's a spreadsheet. And here you can see on the dollar yen, I'm getting a 26 pip range on a 30-minute bar, a 29, 20, 19, you can see. And then with these 20 bars, I've got an average of 23 pips. So if we go back to the chart, 23 pips. If I get into this trade right here, this bullish engulfing candle with a close of 108.06, and I'm thinking that it's going to take out the highs from this morning, which are 28 or almost 30, I'm also thinking it's probably going to go higher. That's what I would think when I was inexperienced back in the day, back in 2001, when I was just trading off of these candle patterns and I wasn't paying attention to volume, participation, the type of day, the type of trading day it was, you know, what's going on in the markets. I wasn't paying attention to any of this stuff. I was just firing off trades based on candle patterns. And then I would get really upset because they weren't working out. So again, if I got into a trade back in 2001 and I saw a close of 108.06, I'm thinking, well, maybe 50, right? 50 is a psychological level. If I even at that point in time was aware of trading to psychological levels, that's something that I definitely do. I incorporate that in my trading system and it works. But again, at one point in time in the beginning of my trading career, I didn't even know about psychological levels. So I was just like everybody else at one point where I was really hopeful, but I was unrealistic with my expectations. I didn't have enough experience. So I was all over the place, and I wasn't taking into consideration what's going to happen realistically. What's going to happen after I get in this trade? Is this trade even going to work? Are the conditions today optimum for price to even take out the high from this morning or even go to 50? So again, measuring trading ranges for each one of these 30-minute bars since I started trading this morning, I've got 23.35 pips. Looking at price now, and that signal candle, I would think, well, you can go ahead and measure it, and it's not going to take out the highs if the averages stay the same. So again, I have to have my expectations in line. What do I trade to? What am I trading off of? But what I'm getting at is the exercise and the work that you need to put in to determine this information. It's important that you have this information. It's important that you're aware of the conditions. Now, we're talking about just the regular trading ranges for these 30-minute candles. So again, arm yourself with more information. Understand the trading ranges. Take note of this. And it is going to be more work. There's more work involved when I trade. This is what I do when I'm trading. I'm also watching the news. And I don't just do it with the currency pair that I'm trading. I'm also doing it with other areas of the market that I'm analyzing. So, for example, many of you have seen me trade the Japanese yen futures when I trade the dollar yen. So I do the same thing. I'm basically doing the same thing. I want to know if today and the trading ranges and the volume is any different than, let's say, last week when it was really busy or the last few weeks when it was trending. I want to know when things are changing. And this keeps me right at that advantage. So I'm always one candle behind, right? I always wait for one candle to close. And then when the next open candle is still open, I'm waiting for that data to settle so that I can gather that information. And I keep moving on. So again, you've probably heard me say this before. sometimes people will post that they're really bored. There's nothing to do. Forex is pretty slow right now. Trading can be boring. I don't understand how trading can be boring. There's so much to do. There really is. And if you want to be one of the best, if you really want to bring in consistent profits, I know that many of you, your goal is to replace your current source of income, whatever that is, whether it's a job or a business. And for many of you, you don't have a choice now because of the conditions and the environment that we're trading in. Um, Coronavirus, layoffs, bankruptcies on the rise, all of that. I mean, this is going to go on for a little while now. So, in my opinion, if you're going to be making, if your goal is to make 5,000, 10,000, 15,000, you're trading a lot of money. You got a lot of money on the line. You don't want to make mistakes. And the more information you have, and the more clarity you have on what's going on in price, structure, volume, participation, all of this information, the more information you have, the better informed trade that you can make. And you're also going to be realistic with your take profit levels. It might make a lot of sense to you when you start seeing worksheets like this and you start calculating the averages and you realize why would it go any further? There's not even any economic data that would move price. Now, again, the other advantage is that I'm also watching Japanese yen futures and I'm also measuring volume levels on the Japanese yen futures on a 30-minute chart. So it helps me what I'm seeing here. I'm not using tick volume, for example. Here with this particular broker, I'm watching Japanese yen futures volume, and that helps me as well. And you can do the same thing with pound futures, euro futures, basically the same thing. But there is a lot of work that goes involved in analyzing your daily trading candles, your daily trading ranges. All of that helps to make a better informed decision. So I hope this information helps you. It isn't always necessary to go and to be this detailed and to be this diligent with the work. I mean, this is as long as I'm trading, I'm doing work just like this. On everything that I'm watching, I'm recording economic data. I've mentioned before, back when I first started, I created three ring binders, went to four, but I created my own worksheets so that I was recording the economic data for each of the currency pairs that I'm trading. The dollar, the yen, each one of them has their own books. And I record that data and I can create my own graphs and my own spreadsheets with that data. And it helps me stay right on top of what's the next report going to look like, or what is it likely to look like as far as the outcome and the numbers, the expected numbers. Now, obviously, there's more work than just tracking the data. It's also looking at other data sets or other reports that may feed into one particular report. Like, for example, we look at three or four different reports that help me compile the data for non-farm payrolls. So that's what I'm getting at. But there's work that's always necessary to track and to analyze if you're going to be making $5, $10, $15, $20,000 a month. If you're trading large sums of money, you don't want to be wrong. You want to try to be right as often as possible. And using this information also tells me when I should stay out of the market, when it's just not the ideal conditions for me to get into some of these trades, expecting some of the take profit targets that I would normally trade to, unless I'm willing to go down to a smaller time frame and start scalping. So it really helps. It really, really does. It helps to gauge, should you get into this trade? And if you do get into a trade, should you hold on for some of those bigger profits, or should you be quick? Get in, get out, don't dabble, don't play around, don't linger in a market that looks like this with this kind of data and then light volume levels.